Japan has a very large amount of government debt because of long-term economic, demographic, and policy factors that have built up over several decades. The debt did not come from one single crisis, but from repeated efforts to support the economy and society. One major reason is slow economic growth since the 1990s. After Japan's asset bubble burst in the early 1990s, the economy entered a long period of stagnation known as the lost decades. To prevent deep recessions and unemployment, the government repeatedly increased spending and cut taxes, which created large budget deficits that added to national debt. Another key factor is population aging. Japan has one of the oldest populations in the world and a very low birth rate. As more people retire and fewer young workers enter the workforce, government spending on pensions, healthcare, and elderly care rises sharply, while tax revenue grows slowly. This imbalance forces the government to borrow more to cover costs. Japan has also used aggressive fiscal stimulus for many years. The government invested heavily in infrastructure, public works, and disaster recovery, such as after the 2011 earthquake and tsunami. While these programs helped stabilize the economy, they were largely financed through borrowing, increasing total debt. A unique feature of Japan's debt is that most of it is owed domestically. Japanese citizens, banks, pension funds, and the central bank hold the majority of government bonds. Because the debt is not heavily dependent on foreign lenders, Japan faces less risk of sudden capital flight or default compared to other highly indebted countries. Low interest rates are another important reason. For decades, Japan has had extremely low or near zero interest rates. This makes borrowing cheap for the government and reduces the urgency to pay down debt quickly. The Bank of Japan has also bought large amounts of government bonds, effectively helping finance the debt. Deflation and very low inflation have also played a role. When prices do not rise, tax revenues grow slowly, while the real value of existing debt does not shrink over time. This forces the government to keep borrowing instead of letting inflation reduce the debt burden. Finally, Japan continues to manage its debt because it has strong institutions, high domestic savings, and a trusted currency. While Japan's debt to GDP ratio is one of the highest in the world, the risk is lower than it appears. However, long-term challenges such as aging, shrinking population, and rising social costs mean managing this debt remains a serious issue for Japan's future.